In this video, we look at the recent decline in battery metals prices in the context of their 5-year trends. Canadian Mining Report is not a financial advisor. This video is for informational purposes only and does not constitute investment advice. The main battery metals have all declined over the past 12 months, and most reached their peak gains in fourth quarter 2022 into early 2023. Copper rose nearly 10% as of January 2023, but has pulled back to a 5% decline. Nickel was up 20% as of December 2022 on supply concerns, but is now off 14%, while manganese has been in negative territory the entire period and is down 17%. Lithium had the biggest spike to over 20%, driven by the tail end of booming electric vehicle sales and processed lithium supply constraints, but is now down 35%, and cobalt has seen the weakest performance and the earliest losses of the group, down over 30% by July 2022 and sliding to a 60% loss currently. Well, this looks quite negative at first. Considering these moves in the context of the 5-year history for these metals, they look more like reversions to trend after distortions driven by the global health crisis. While the extreme boom phase for lithium may be over, the secular trend remains strong, and it's still up 148% since 2017, the most of the 5 battery metals. Nickel had been rising well before 2020, and if we take its 2 unsustainable spikes in 2022 out, it also appears to be following a steady uptrend and has gained 121% since 2017. In contrast, copper was relatively flat from 2017 to 2020, and its upswing was mainly driven by the rebound from the global health crisis, so it's unclear how much of its 40% gains will hold. Manganese was in a downtrend from 2017 to 2020 that appears to have resumed after a brief jump in mid-2021 and is down 16%. And cobalt has had one of the more volatile trends long term, with 2 big spikes and then reversions from 2018 to 2019 and again from 2021 to the present, with an overall 21% loss. The battery metals have very different levels of contribution to their demand from the sector. For copper, electric vehicles and storage are forecast by the International Energy Agency to only rise to 2.8% of total demand in 2030 and 3.5% by 2040. For nickel, this demand is expected to be 19% of the total in 2030 and 24% in 2040. For cobalt, batteries were already 15% of demand in 2020, and this is expected to rise to 41% in 2030 and 40% in 2040. While batteries already comprise 30% of lithium demand in 2020, and this is expected to rise to by far the majority in 2030 at 68% and 2040 at 74%. The core driver of this demand will remain electric vehicle sales globally, where growth was already over 100% year-on-year for most of the second half of 2020, but really boomed in 2021, with an average 150% growth year-on-year. While it still had impressive growth in absolute terms since 2022, up 54% on average, this is just a third of the peak growth, and there are signs in recent months that this is slowing. At the same time, there's a strong rise in the supply of lithium expected to come online in China this year, with the country accounting for 70% of global processed lithium, which could see lithium supply start to close the gap with demand for the first time since around 2019. We could therefore see some further downward pressure on the lithium price this year, although the long-term trend will likely remain strong. For more on the battery and other base and precious metals and junior mining stocks, go to www.canadianminingreport.com.